So hi everyone, my name is Edith Yeung. Today I'm really excited to have Raymond joining us today. So in the next an hour or so, I've always been known for like super on time. I'm going to spend about half an hour interviewing Raymond about his story, his background, his investment focus, and some of the tips and trends that he's paying attention to. But before I start the whole conversation, I want to do a couple of quick public announcements. Later tonight at 9 p.m. tonight, for some of you, we have over 100 people sign up for a accelerated program information session. So that is happening in 3 hours. So that's happening tonight. And in addition to that, on June 29th, at 1 p.m. Hong Kong time, we'll also have a growth and marketing expansion conversation with Louisa from Vector, hosted by Philip, my co-founder for Founders Hong Kong. So there's some of the upcoming event. With that said, I'm going to invite Raymond to join us and show his video. And I'm going to quickly interview him for about 30 minutes. And Raymond and I actually met a long time ago. I hate to date myself, but I think
That's
I
right.
met you when I was still working on Dolphin browser way back when. I think my co-founder originally from Wuhan, and somehow you guys all met. But maybe we can start a conversation. I'd love to learn more about your story before Samsung Next. Even though I know you for a long time, I actually don't remember all the other awesome and engineering related things that you have done. So Raymond, love to learn more.
Well, thank you, Edith, for this lovely event. I can briefly share my experience, mainly for the founders and also investors in the audience, right? So I would say I discovered this venture investment career as my second career. Before that, I was a maker, right, by myself. And that's probably part of the fun story of my career, right? Originally, I was in the telco world, had undergrad in China and then master in Toronto. Then I went to, at New Reach Networks in the telco world, work on good old ATM switches. By the way, not the ATM machine, but the ATM switches that in the 90s. That was actually as hard as Cisco today. And then I went to Columbia for my PhD. So that was really the hot, .com bubble days. Everyone has companies by themselves, and I had one. Also, office mate start one. So we are all very happy doing those things. But then, so one day, Siemens called me, say, "Oh, we have an incubator in Berkeley called the Siemens TTV. Why don't you, pay a visit? Are you interested in that?" I said, "No, I don't. I'm not." But they said, "No. It's actually you know what? We're gonna form a company based on your PhD ideas." I said, "Okay, I'll pay a visit." So that was August 2001. Okay. Then 1 month later is September 11. Yeah. Oh, wow. And then even during that time, the whole telecom industry had a recession, right? Okay. Right around that time or even before that. So then I said, okay, what should I do? And then I decided, okay, let me take a shot. Okay. And then basically I glorified, EIR inside the Siemens Technology to Business Center. So that's my early exposure to startup, the real startup, right? So it's really the project is actually, you do have a decision freedom, but to commercialize your own PhD work. But on the other hand, there's a clock ticking. If it's not working out, then you're going to be actually let go, right? So that's the pressure. And we spent at that time, we spent the first year trying to go out to raise VC money. That was 2002. That was basically the nuclear winter of telco.
Right.
All right. There was no money. No one wanted to invest, right? And then we naturally fall into now I say it's a trap, right? We fall into the trap. Is okay. No, there's some business unit inside, Siemens. They may be appreciating what you are doing. So went after that, and then it was great. It's like we discovered really the vertical market and where small company can survive well. So I had that is sort of the basically the long story short, right? Over the next 4 years, I had maybe I would say 4 product releases, right? I duplicate the model, then I start, also hiring other people come in, base them in. Say, okay, now how about we make a product out of your PhD work, right? So all good story. So that's how I built up my career. Then afterwards, I spent a few years in Germany. Was a CTO for the business, basically the internal Cisco. And when Samsung want to form a new investment team, basically the precursor of a Samsung Next Venture, they say, okay, we want to learn, from a few companies. One of them is Siemens DB. So that's how I joined Samsung. Really as full-time venture investment. Okay. Is the goal here is to change the traditional corporate venture model, focus on more early stage and with more, I would say, potential collaboration with the business units as sort of the upside, right, for the mothership. But at the same time, our value add to the entrepreneurs would be, okay, our domain know-how, sort of then potential use now Samsung as a customer, a distribution channel partner for the startups. So that's sort of in a nutshell what we do today. I've been with Samsung for about 9 years.
Wow, long time. So from 9/11, start a company and gone through this whole winter of raising venture capital, Siemens and now Samsung. Let's say like now you're a completely different role, right? So you're actively investing, representing Samsung Next. What are some of your focus? Like, are you very hardware focused? Obviously, Samsung is really known for mobile, but there's a lot more things going on as well. So what are some of your interests in terms of like vertical, geography, and stage? That's right. We intentionally focus on software and the services from day one, because to complement the Samsung's hardware strength, right? When we say we focus on software and services, but also do we invest in some of the hardware companies as long as the innovation is in software, right? I always say that hardware probably is the best package for your software innovation. Okay, but it's just very hard to do hardware right. Yeah. Right. Hardware is hard. Yeah. So the focus area these days, we have 6 focus, I would say, segments, 3 technology segments and 3 market segments, right? Technology segments are blockchain, edge computing infrastructure, and also AI, frontier tech. So those are 3 technology focus segments. And then 3 market segments, health tech, media tech, fintech. These days we gear more towards pre-seed to seed stage, and also at the same time also cover Series A to up to Series C. Yeah, and we actually starting this year, because we have a change of strategy with our new leader at the Samsung Next, David Lee joined. He came from SV Angels, so he's basically implementing the SV Angels model into Samsung Next, right? So we are before, on average, we do 1 deal per month, 1 new deal per month in the previous years. This year we're going to do about 50 deals in a year. 50, so far, 50. Yeah, 50. So far we have done 25. Oh wow! Yeah, so it's really like dramatically much higher than the number of deals that you used to. That's right. Yeah, so we make a decision very fast, and we write small checks because the fund size it does not increase, so we write smaller checks. But then we have basically decision autonomy. We make a very quick decision, and so that's our basically very simple, value proposition to the entrepreneurs is that we fit our check size so small, we fit into any rounds. Don't worry about dilution, and our value add is very strong, right? It's not about the money. It's really, we want to invest in the best builders, the most, I would say, audacious, courageous builders out there. Yeah, and we want to work with them, and that's why and we have a very aggressive pace of deploying, capital these days. Wow. And what is your geography and also the range of check size that you guys now do?
Yeah, the range of check size is small. It's typically, I would say, between 50K to 500K. That's about it. Okay.
Oh, wow.
One check. Yeah. The geography, I would say, we heavily focus on in US and in Tel Aviv, in Israel. Yeah. Then we are opportunistic in Europe and other parts. And also we have a team in Korea. So we do that team is basically investing in Korea, but also cover part of the Asia.
Got it. And with such up to 500K, do you prefer the lead or follow?
No, we do not.
Matter?
We do not.
Do not.
So that's why the decision is very simple. It's actually very fast, right? We don't have these days. We do not ask for board observer seat. We do not lead. No any special information rights, right? So it's a very simple, terms.
Okay. So since you mentioned earlier about you're very interested in AI, blockchain, healthcare, fintech, media tech, I'd love to hear your thoughts around sort of blockchain and crypto. Are you investing in like a crypto company? That's cool. That's new for me. Like in terms of coming from Samsung, what's your thoughts like around
actually?
The space?
We have been investing in the blockchain for quite some years. Some of the bigger, blockchain companies, we had investment in them. Like for example, Dapper Labs, or upcoming ones like a Forte or Alchemy. They all raised big rounds, right? We have investment in them, 2 to 3 years ago.
Nice.
And also like a Sliver TV, and their new name is the Theta Labs, right? We invest in them like when they were doing esports streaming, right? So we have actually fairly decent blockchain coverage in the past. It was one of our focus area. And then starting this year, we are even more aggressive deploying capital especially to the companies, focus on the creator economy, like the NFTs, right? And also some of the companies address some of the fundamental problems in security and like wallets, cryptos, yeah.
Wow, very, very hip, very up to date in the NFT 100.
It's an important area, right? Blockchain, our view on blockchain is actually more fundamental than most of the people. We are less, much less into, say, DeFi so far, right? Into DeFi or the crypto trading, right? Because Samsung, we are conservative, but on the other hand, we are more bullish about new consumption behavior. At the time when we start invest in Dapper Labs, for example, they just finish Crypto Kitty. Yep. Okay, they have not really launched a Flow token nor NBA Top Shots, none of those. The rationale for us to invest in them was simple, right? This is someone spends so much money just buy those silly kitties. It's a new consumption behavior. To us, it's a new consumption behavior. Right, we are sometimes a consumer electronics company. We pay a lot of attention to consumers. Right, that's the rationale. It's a very simple rationale. Got it. So that's what we are true to that same belief that now these days we see DeFi is actually getting more exciting, especially decentralized the exchange like AMM, automated market makers. Right, that's actually getting very very interesting. I view that as this a connector for different type of silos or crypto silos. Yeah, that's good as an infrastructure piece. The other thing is, as I mentioned earlier, is the creator economy that's enabled by NFT. Okay? That go way bigger than just the token itself. Okay, it could be bigger than the token itself. Right, because this as I say, is actually new economics between the artist, the musicians, and their customers directly. Okay, new subscription model, not ads driven, right? That's actually very exciting, and we want to be close to that. Yeah. And
are you guys investing in token then, since you're looking at DeFi and paying more attention to those sort of deals?
So far, we usually get tokens through Soft. or through, we are helping our portfolio companies, so we set up nodes, and therefore naturally have, tokens, distributed to us. We get token in that way, right? So far, we don't have, we haven't really got the green light to invest directly in tokens yet.
Got it.
Right? I think that's typical for many corporations at our size, right?
Yeah, makes sense. And for the audience who may or may not know what SAF means, it's a simple agreement for future token. As we're seeing more and more projects, like in the past, like the SAFE concept, which is super fast to invest in equity, but now there's either equity or also for tokens. So it's been a fairly common practice, at least in Silicon Valley, for fundraising for token projects. So Raymond, I know like in the past, and still is, right? Samsung was one of the first one to launch a VR headset. Are you guys also still looking at VR, AR related companies?
We are still paying attention to that. We invest in quite a few AR, VR companies in the last cycle. We're still actually monitoring them. Just the recent ones is actually, we are waiting for the new companies to popping up. Okay? We're open to it, right? It's part of, I would say they're part of our media tech investment thesis, right? It's just, I mean, the sort of the industry is going through natural, the hype cycle, right? So I think people are waiting for the momentum to start again, right? I think it's coming up because of 5G. So the telcos are really, investing with the marketing budgets to make some of the killer apps for the future. So I do see that VR is catching up, AI is coming up also after that. I think it's as long as there are some, fundamental improvements in the devices are coming. But there's still some of, I would say, the hardware innovation need to happen. Yeah. For both, I would say mostly more for AR, but also a little for VR as well, for them to be more consumer, friendly. Yeah. Yeah. So let's switch topic on the AI side of things. So it seems like there's so much going on. Everybody talking about AI. Are you kind of looking at very specific use cases, particularly fintech and healthcare tech? Love to understand like some of the pain point and use cases that you're looking for. Yeah, the AI, our point of view is that we believe in a more of the next generation of AI, more efficient learning algorithms with less data. Okay, with, for example, one-shot learning or few shots learning. This is a technical term, is that you just actually, the learning, the training of the AI algorithm is just a few set of training data. You run them through the neural net, and that's it, right? So we're looking for some of those new type of learning algorithms or transfer learning. So for example, you train the one place, you transfer them to the other problem space, right? We're looking at and then the other more advanced, more deep tech is the artificial general intelligence, right? So that we use the sort of more complex neural model of human brain rather than just the original neural nets. Neural nets is actually an old model, right? It's more than, I don't know, it's in the 70s that people discovered it, right? So so we're looking into those kind of a new AI, fundamental AI innovations that are more data efficient, more can be run in a smaller, device setting, rather than you have to, use a large amount of, compute and also data to train it. So those are our intentional angle. Because we believe that that's probably have a more fundamental breakthrough and more return on investment, and also has actually benefit to Samsung as well. Yeah. To switch topic a little bit, we talk about what you focus on, what area, what stage. I'm definitely excited and surprised that 50 deals a year is a lot of company. That's right. We are busy. Many companies that you're doing. That's amazing. It's almost like the accelerator model, but except you're not running an accelerator, it's direct investments. Correct. And to switch topic, I'm sure, an audience, there's plenty of founders which are at different stage. Let's talk about a sort of exit and IPO and SPAC, right? These days it's crazy. I have a company the other day were telling me that they raised at a valuation of 100 million, and some SPAC sponsor want them to go public at 2 billion.
it's insane. Like, what do you think about it from your point of view?
Yeah, I had one portfolio company went through SPAC IPO. It's AST Space Mobile. It's a satellite company. I love them. And I was actually with them only for 1 year. So I invested in them beginning of last year, and then they went IPO this year.
Wow.
It's a very,
wow.
What they are doing actually make a lot of sense, but of course has risk, require a lot of capital, right? So their original plan is, I mean, they already got a lot of, investment from top tier telcos, like for example, Rakuten, Vodafone, American Tower, because what they do is that they put basically a large antenna on a satellite with a constellation of satellite into the sky, so that your normal smartphone can talk to satellites directly without any other device. Okay, it's very I would say aggressive design, but it's fairly innovative. That's why the telcos are all excited about it. Okay? Yeah. That said, they say, okay, we raise so much money, but down the road we have to launch more satellites. We have to raise additional, I think, exactly probably $500 million. But now, I would say July last year, then someone knocked at their door to say, hey, I give you this amount of money, let's go for SPAC.
Wow.
No, the founders, I mean, the board discussed, but it all makes sense, right? Rather than you wait 2 years to raise that capital, you have to know, we don't know yet what happened by that time. Money right now, so why not? Yeah. Right. So to me, that is a good case, right? Because the entrepreneur needs that amount of capital anyway. It's on the roadmap, and they get it earlier through a SPAC IPO. Why not? Yeah. So that to me is what I believe in, is that if the entrepreneurs have this capital needs, it's on your roadmap. You have a good use of this capital. Go for it, right? Yeah. And as investors, we are still excited about them. I mean, on their journey, they just shorten their capital raise, and they don't have to worry about money anymore. I mean, it's the same company. They're focusing on the delivery and implementing the technology. So that's all good, right? This is to me a good case, right? Of course, on the other hand, I mean, there are a lot of more speculative stuff that I won't comment, because they're all public companies. It's not up to me to comment about how much value they are, right? Yeah, I'll just use my portfolio as this is the only example I have. I think in this case it makes sense. Yeah.
Congratulations. That's like one of the shortest exit I've heard recently, which is good for you. And yeah. So we have quite a few questions from the audience. Some of them are anonymous. So I'm going to actually start asking some of the anonymous attendees. And from the rest of you who want to ask questions, please type it on the Q&A on the chat. We're going to actually bring you to the video. So Raymond will get to meet you as well. And I will promote you guys as a panelist so we can see each other. But on the anonymous question, this one is a good one. Talking about like Korea, because Samsung obviously have a very, very strong like Korean DNA, and recently also seems like very active in Southeast Asia. And how do you actually compare Korea, Southeast Asia with US in terms of talent and startup environment? Do you think that seed investment of community in Asia are as conducive for startup to do well, or like investor in Asia look for return or adding value? And wow, that's like a lot of, but yeah, how do you see like the Korea versus at least US and Southeast Asia?
I think the Korea recently has quite a few, two exits, big exits, right? Roblox and Coupon, right? But both takes quite some years to grow, right? So, but over the years, they validate, there's actually Korean companies can grow very big, can go for IPO, very big successful IPO, right? So this, I do believe that with those big success case examples, Korean entrepreneurs will be more, I would say, encouraged to start up their own. Okay. It's less, my observation is that there are already a lot of entrepreneurs in Korea. They just need to be have a bigger vision, and there's a lot of Korean Americans here, right? And probably now they're more encouraged to work together with those hardworking engineers from Korea side, right? So that's why I would say I expect to see more and more. Yeah, especially with the recent successes, and we are actually intentionally investing more into Korean companies as well. That's what we have a team in Korea, and now that in the future they're going to do, and they're already starting this year. They're going to do more investments in Korea and also in Southeast Asia, for example. Right. My view on Southeast Asia is still that I think there's I'll take the approach of there's a developing country, largely underserved market. I still a great growth potential.
Yeah.
Right.
Yeah.
But on the other hand, the infrastructure is lacking. Right. It's harder to cover those regions. Right. So that's where I think those are the challenges. Right. We pay attention to those areas, but because of lack of people physically there, based there from our fund to cover, so it's harder for us to assess the cases yet. Right?
Yeah, makes sense. I think really quick on Korea, if you think about it, right? Korean entertainment like BTS or Blackpink have done so well. I think that formula obviously work worldwide in terms of how popular it is. I can see more and more Korean startup founder learn from K-pop and go global. And
That's
then,
right. That's right.
And then as far as it's really interesting to see Grab actually went public via SPAC a few weeks ago. And I think they're more and more going to follow the footsteps. But it's really interesting sort of watch Southeast Asia playbook. It's actually quite similar to China, and at least like the behavior is similar. So I think there's a lot of really interesting company to look for. But in general, I think for raise capital, we also look at AI related things, blockchain related things. We do find that infrastructure, like data infrastructure, or more business to developer, open source, open core, there are more talent in North America and in Israel. All right, I'll move on to the next question. I actually don't quite understand the question. Do you think CVC types are conducive to growth for startup? I guess like in the past, and I wrote about it on my newsletter as well, there's a lot of corporate like to invest. And obviously, Raymond, you've been with Samsung for 9 years now. You've been super active in the past. But sometimes, there's always, I remember my previous company, Dolphin, was invested by Qualcomm, right? So we often wanted to work with our investor. Hey, please do BD deal with us or partnership with us. Can you introduce me to your population? If Dolphin can be embedded in the Samsung smartphone, it'll be millions and millions of users, right? What would be your advice? Let's say if I do another browser, working with you as your portfolio company, like how do you actually approach you in terms of doing work with Samsung?
Yeah, I think we took a lot of lessons learned, right? The one thing is that you cannot force a marriage of a very, very early stage company to a very, to a giant, business unit like inside Samsung. Things need to happen very naturally. Okay. I put it in this way, right? Not for lack of effort. No, in the past several years, the biggest MBO in our investors, for our investors, are collaboration. Not about the deals you have done, not about the returns you generate. They are actually the successful collaborations with portfolio company are the biggest MBO to our investors. But even that, then the lesson we learn is we are forcing marriage. Okay. So that's why we took that lesson. We said maybe we should not overdoing that, right? It's just there are certain cases that just if that's not the timing is not right, the business case is not strong enough. Then regardless how hard we push, top down, bottom up, we tried both, right? So many cases in the past. It just at the end it's hard. Okay. So one thing I would say to all the entrepreneurs out there is that have the right expectation and also the understand the context, right? I think I would encourage all of you to talk to the CVCs that's relevant to your business. Okay. They're well. I mean, I guarantee you, part of the MBO are related to driving collaboration for sure. Okay, so they will be your helpers, the guides, to navigate inside their motherships for sure, right? But as entrepreneurs, I would say be realistic. Okay, even with the internal helpers, it may not happen. In most cases, may not happen because just naturally, the doesn't fit, right? Think about Samsung, for example. We sell, tens of millions of devices, in one, new release, right? And the requirement about, the quality of the software and also the user experience, which means that we don't want to have too many, apps on there, right?
Yeah.
It makes it very hard to customize, right? To meet with small investors, that's why small companies needs, right? So sometimes it may be better for these companies to work with smaller vendors.
Yep, understand. Yeah, I think sometimes like too early stage, you probably don't want to work with such a big company to completely change the course of your product. You really need to like be, at least in my own experience, is really need to sort of set your own direction first before working with such a big company to change course. So
yeah, but that said, right? Have them on your cap table as long as they're not demanding is great, because they basically legitimize your business. And if you get sort of the tier one corporates to invest in you, for example, in mobile, you get Samsung to invest in you, or in Qualcomm to invest in you, it means that you are the top, right? At least for mobile, right? So that's itself is a big achievement, right? It's a big milestone.
Yep, absolutely. Okay, let's move on next question. This one is a good one. Now you're doing 50 deals per year. How do you keep an eye on them? Actually, how big is your team, Raymond? I guess you're recruiting new talent as well to join you guys. What are your criteria when you, so how do you manage so many?
We have quite a big team, right? We have quite a few, associates these days to work with, to trap the company, or to be busy outsourcing new deals, right? And also we have a big platform team to manage the portfolio companies. And our platform team actually not just looking for internal opportunities, but also looking for external opportunities. We also have HR services for them, marketing services for them, and the sales, all those things. So that actually manage, I would say, so far so good. We can manage the large portfolio, right? That's our approach, and we're continuously, looking for new talents as well. So you're gonna see, the job posting from our website or from LinkedIn, right? SamsungNext.com. For people who are interested in, getting into, corporate venture or just in general venture capital, this is a good training ground, right? So basically throw, good people at the scale. Yeah.
That's awesome. Glad to hear that you're hiring.
Yeah, it's a thing that where CVC, can differentiate from traditional VC, because our headcount has a separate budget, so we can actually justify the additional headcounts.
Got it. Cool. And then from the audience, this is the last anonymous questions. Are you interested in the energy storage or electric mobility in terms of your investment strategy? What do you think about it? Is it a part of your focus?
It's not part of our focus, but we are opportunistic to all the other new topics. Okay. So I would say I wouldn't give you a generic answer whether yes or no, right? It's all case by case.
Got it. Okay, cool. With that said, I'm going to bring up Alvin. He would like to ask the question live. So give him 1 second to join us as a panelist so you get to meet him.
Hey. Good afternoon, Raymond. Thank you so much. Edith, thank you so much for doing this. Thanks for your insightful comments. I can imagine how busy you are to take the time to share your thoughts with us. My question is basically, we are a Silicon Valley startup, 32 patents, 26 issued already. Our focus is smart sensors. So basically bringing machine learning to the device. And our expertise is basically analog and mixed signal for ultra low power. So my question is this an area that either you or your colleagues might be interested in Samsung?
Yes. I would say, short answer, yes. Right. I already mentioned, right? We don't mind if your product is hardware, as long as there's like a fundamental software components in there. from what your description is, looks like it's a soft sensor because you apply machine learning, right? Rather than the basic sensor modality itself, right? It's more like you have a software running on top of that. So that makes sense for us. Yeah.
Okay, that's all I wanted to know. Thank you so much.
Thank you, Alvin, for your question. So I'm going to quickly, not to demo you, but back to audience. Bye. So in this case, we're at a live event. So Alvin just got to meet you, and by the way, like I found that now we're still in the virtual environment. It's very, very hard to meet people brand new. So what would be your advice, and more general advice, Raymond, like for Alvin, just pitch you, what are some of like the things that you look for in terms of part of the pitch when a founder pitch you like in this way?
Yeah, I think the depends on your stages, right? When we look into seed stage or even pre-seed stage companies, right? The first thing we look into are the peoples, okay, the team, right? That's very natural. To see if they have the drive, to see if they are fit to the problem. Okay, there's this problem founders fit, in addition to the product market fit, right? Are the founders, suited to uniquely, fit to addressing this certain type of problems, right? There could be many implications. For example, do the founders personally suffer from the pain points? So they realize they have to fix that problem, or do the founders have, big, thought leadership, roles in the community, so they can really achieve in the future to solve the problem.
Yep.
Okay. Then the next thing we look into is really say, how much do the team understand the problem? Okay, can they explain the problem well? Can they emphasize as the user who suffer from the the pain points, and then say explain that way, and then think about, okay, how I may be able to solve it. Yeah. For later stage companies, then we look into, of course, their technology, innovation, or the business model innovation, and see how they, how big a moat is going to be, right, for the solution to the problem, and also the differentiation from the market. Yeah, and in all those things also, I mean, we are thesis driven, right? In the sense that we have usually our thesis, our point of view about the market size. But as investor, we care about the size of the market, right? You could have a very beautiful solution to a tiny problem, for a tiny, market. That's not, fundable, we say, right? So that's sort of our behind the scene work all the time, is to, have our strong point of view for our focus areas.
Yeah. I think a lot of times a particular, obviously this is a nonprofit for Founders Hong Kong, and I think a lot of the founders from Hong Kong often talk too much about the product itself, but don't have enough of an opinion or understanding what's happening in the market. Yeah. I think it's so important to have a good sense of what's going on in the world. Otherwise, the likelihood of what you're working on is you're the only one that is not high, but it's okay, right? You need to have a very clear understanding of who your competitors are. Yeah,
I think this is very typical to I found for entrepreneurs coming from not all the big thematic areas. When I say big thematic areas, like for example Silicon Valley or Israel, so or the Boston or New York, or you name it. Nowadays are asking also Miami as well. So those usually it's the sort of the scope, right? The view of the world. How big can you dream, right? Or have you discovered really huge pain point? So those are usually missing. People tend to have, I have a very nice product already made. Okay, and you invest, right? I already have everything figured out. So they have a technology first, they have a product first, but then they forgot, okay, what is the business? What is, the problem you're trying to solve? Yeah, so that I would really encourage, entrepreneurs to think bigger. Yeah, you have to dream big, so big problem. Even if you reach maybe 10% of it, it's, or it can be a very big deal.
Yeah, absolutely. With that said, you talk about the geographic coverage, and COVID been crazy, right? San Francisco is supposed to open up tomorrow, finally.
That's right.
But I guess you and I are still working from home most of the time. So in this case, like there's more generic tips, like any specific tips now, I have to do this over Zoom to pitch you. Is there anything that I should be aware of if I'm a founder?
Yeah, I think we also we sort of adapt ourselves, right, during the COVID. So we sort of even though we do prefer face-to-face meeting, but we actually we are used these days to Zoom meetings as well, the video conferences as well. It's very efficient, and I don't have to spend the time traveling, right? And it can be scheduled actually quite efficiently. The key thing there is, I would say entrepreneurs need to be also mindful. You yourself has to be mindful as well. Is you are going through back to back, this kind of investor meetings. The investor may be actually taking back to back meetings with other entrepreneurs as well. So you need to probably think about the highlight of your presentation, what you want your audience to remember, right? To stand out. That's even tougher because there's a meeting fatigue, right? It can be very easy work from home, not just suddenly from the morning to the evening, just back-to-back meetings, and then the day fly by. And there are so many meetings. It's very hard for an investor to remember what is exciting about the particular startup. Yeah, so it's even more important to really get to the point faster and to look for I would say that the resonance from the investor, right, from the audience. So, okay, yeah, if you don't find that, try to figure it out on the spot.
Yeah,
right?
Absolutely.
There's no point for you to go through the whole presentation. You have to go through the whole presentation, right? You don't need to do that. You can send a presentation, in advance or afterwards, right? Just really is a discussion. You really need to nail down the points that you see. Okay, at this point that you resonate with the audience.
Yeah, agree. I actually wrote an article about, now basically virtual dating with investor. And as you talk, if you're pitching Raymond or myself for the first time, this is really a date, right? The first time there's no way be able to commit and invest. It's really about the only goal is about making sure that you have the second meeting. So build relationship, not just purely pitching for money, because it's really the relationship that will last. To really highlight your founder market fit is super, super important. And then we'll love to learn more. With that said, I'm going to bring up Miranda as a panelist to ask the next questions. Miranda, I can't see you. Hello. Miranda is in the dark. And as she is trying to figure out what's going on with her camera, I'm going to actually ask the question that she typed. You mentioned decision making is very fast. So aside from, I think Miranda, are you joining us? So aside from the sector, did you?
Yeah, she's coming.
Hey, all right.
Hi.
Okay.
Hi, Edith. Hi, Raymond. Thanks for the insightful sharing.
Sure.
Yes. Well, just very quickly, I've been a growth capital investors for 2 decades and humbly learning the VC space now. Oftentimes, now that I'm a mentor to a lot of startups, what I found is just now I heard, you mentioned about the highlights, the pitches and whatnots. But I run into another pitfall that, are there any possibilities that based on the first couple of meetings, you're picking an entrepreneurs doing well in marketing, but not in execution? And, when you need to make fast investment decisions, how do you follow up in terms of, really executing a sustainable growth plan? Thank you.
It's a good question, right? Sometimes we may be able to spot the team is missing one person, for example, right? They are missing the ideal, for example, the builder. They have a great CEO, fundraiser. They have a great marketing person, right? Sorry, that's my dog barking. Right? So that's the case. Then what we could do is over the next journey after investment is to help them find a co-founder. Yeah, that's one thing. But sometimes the founding team already have a person. That's a more difficult situation. The person is not suitable as a strong builder, and we may or may not know it. Okay, the maybe the case is actually there's no way you can you can detect that during a few meetings. It's because it's the early stage, you haven't built anything yet. The only thing you can look into is their resume, right? And the other thing I want to make it clear is I don't want to over-bias to say that we have to fund, serial entrepreneurs, right? There are many actually first-time entrepreneurs that are great, right? For example, Google founders, Facebook founders, right? They're all first-time entrepreneurs, right? So I'm not biased towards that, but on the other hand, that's the risk, right? You don't have too much, evidence to say. By the way, it's not just, the execution person. It could be a CEO is not suitable,
sure,
right? So then you get into, that's a typical, it's a delicate, tough issue that how do you, convince the founder to step down. I'm not saying stepping out, but stepping down, have more, capable people to come in to play the role. Yeah. Once I feel very strong is that I think founders are always unique, right? To our company, they should be involved if we can, whenever possible. But that doesn't mean that they have to play the roles they were originally in. But it's a delicate issue, right? I mean, there are cases I've seen that when you want to try to replace the CEO, then the company die after that, right? So it's not easy to handle.
Yeah, similarly, I've seen situations before. Thank you.
Yeah.
Thank you, Miranda. Good to see you.
Thank you, Dan.
Yeah.
Yes.
Raymond, as you said that you have a dog, today I saw a really, really funny company. I just sent it to you. This is more of as a joke. It's called Proof of Dog. Is a blockchain crypto company for your dogs. So apparently there's over 1 billion unbanked dog in the world.
Yeah.
Okay. You read this, it's like hilarious. So I start seeing people are sending out their wallet address to get airdrop for this Proof of Dog token. Anyway, this is completely just a big joke. So for those of you who have any other questions in the audience, feel free to type up. I will promote you as a panelist. But yeah, let's go back to like our conversation. So I know, Raymond, we're gonna play this game, and I get it. I think like Samsung have obviously you don't represent Samsung, but just more like your in your personal opinion on certain area. I'm gonna ask you a whole bunch of like questions. Some of them you already addressed, but just to and I would do the same thing too. So I'm basically going to say the name or the particular vertical, and then we're just going to do thumbs up and thumbs down. So for the audience to know like what you're interested in, what you're not. Some of it will be repeat. For example, fintech. Right.
Yeah.
And then hardware. That's no for me. I have bad experience with hardware investment.
I'm neutral. We can handle hardware, right? We probably say no to most of the hardware proposals, right? Because we know about how hard hardware is.
Yeah, that's very, very, very tough. How about semiconductor? I
do not cover semiconductor.
Okay.
Yeah.
Okay.
We have a separate fund. Samsung has a separate fund. That's the Catalyst fund covers semiconductor.
Okay. Separate fund. Got it. How about EV? Some folks asked earlier. Not for
me. EV to me is not my focus area.
Okay. Okay. How about biotech?
Biotech.
Not for me.
Put it in this way. Not for me, but it's important for Samsung.
Got it. Okay.
Yeah. Not for me, but important for Samsung. Yeah.
Okay. Crypto.
Crypto, yes.
Okay. Blockchain, of course, we talked about that. How about consumer mobile? Okay, you're still looking at that, even though
we are still looking at it.
Okay.
Yeah, put it this way, right? Quite a bit of consumer blockchain ideas are still, they're consumer mobile, for example, right? Quite a bit of, media tech touching on the mobile as well, mobile first.
Okay.
Yeah.
Good to know.
Just in a different form. There's no maybe single sector consumer mobile, right? I mean, when we class them into different categories, they are basically, getting into, they fit into different, sectors.
Yeah. And then I have a few more. One from the audience. What do you think about prop tech and real estate tech?
It's not my coverage area. I don't cover it. Okay, it's out of the scope of our fund. Yeah. Same. I think it's interesting. And there is definitely prop tech and real estate tech focused investor out there, but unfortunately, that's right. I think could be relevant to the fintech space. Could be, I would say, could see blockchain being used in some of those cases. Then I would be interested in, because the one thing that we're still looking for more applications is that's for blockchain, right? So far, still very few categories of applications in blockchain.
That's right. So with that said, how about InsurTech then?
InsurTech, actually, we look into that. And so I'm sort of like this way, right? We look into that. Our team actually had a few cases proposed in there. It's what I would say is part of our fintech discussions. That's one angle. The other angle, I do see, for example, IT security or home security, home IoT security are being offered as part of InsurTech.
Yeah.
Right. So that's actually interesting.
Got it. We already talked about, obviously, AI and data is definitely thumbs up for both of us. And then I guess, are you also looking at a lot of the open source? There's like tons of projects on GitHub these days.
Yeah. So for example, in our infrastructure edge cloud investment, we have a particular, buyers favoring open source developers. Yeah, favoring open source, right? Because in our view is that it's an unfair advantage for small companies these days against big companies.
Yeah.
Because think about how you're going to conquer, enterprise, right? Sales. If you go to the traditional top-down, it's going to take you years and years, right? If you're leveraging open source and then convince the developers in those large enterprises just to try your stuff, right? It's basically a developer-first go-to-market approach. Yeah, that's the power of open source.
Yeah, it's definitely really exciting, especially now GitHub is 40 million users last reported in 2020. Definitely a huge, and this is actually very, very much cross-border. I've been seeing also even in China, the BAT of the world have a lot of really talented developers that contribute to open source. So super interesting to see.
Yeah.
And of course, enterprise, thumbs up.
Yeah.
How about space tech?
I told you I had one only. not a SPAC company, right? I mean, a satellite company.
Oh, yeah. That's right.
But other than that, I'm paying attention to it because I mean, but not actively, looking in that way. Yeah, it is actually interesting, change because the cost of launching satellite is actually reduced so much these days. Yeah. So this actually is an interesting area to continue paying attention to.
Great, good to know. All right, we have one last question on the audience, and then I need to end this on time. So this is always a tradition. And I'm going to have Michelle to ask the last question. It's related to InsurTech. Michelle. Please show your video and join us live. Hello. Okay, I guess there's always technical difficulties. So I'm going to ask her question on her behalf while she figures out the video situation. In order for
Ashley is coming up.
Hi,
hi,
Hi, Michelle.
Hi. I work with basically some startups, and I was part of the corporate setting, and basically all this traditional business is like trying to get a lot of users to come directly to their app and try to collect as much information as possible. but obviously, you know, the type of consumers that you're trying to attract are very different from the notion of a, you know, a bank or insurance. So do you see, when you're focusing on entertainment text, do you see a future where traditional insurance or banks would integrate the services of entertainment only startups into their ecosystem, so the users just go there and just look at it every day because they're entertained?
It's a very good question. I think I can see that you put out quite a bit of thought into that, right? The insurance industry is actually, if it works, it's actually worked very well because you are printing cash, right? I mean, basically, people pay you, premium every year. They don't claim too much, right? But the insurance company need to continue to justify the value, right, to the subscribers, right? Sometimes actually they do. I do see some of them saying, okay, I want to offer more wellness devices or the services to my subscription base so that I have ongoing engagement with them, so that they don't churn to other places, right? So I think it is actually a very healthy way to look into this as a churn fighter. You want to reduce churn because once you get them in, they're happy, then you are printing cash there, right? You're printing money there, right? So that's effective, I think, right? And that's actually helpful for the ecosystem because then you see, large corporations like insurance companies starting, putting money into the ecosystem of, the wearable devices, the healthy, eating, all those things. It's a good thing.
Yeah, it's a good thing, and a lot of them are doing it. But just from a consumer perspective, user perspective, everybody who's fit and everything, they already know where to go for their diets or their exercise routine and whatever. So to the next stage, right? Am I gonna really look at that app daily, even monthly? I don't even want that service. I know where to get it. So then, if you just go back to the consumer's behavior, they look at Instagram, they look at WhatsApp, what your friends are doing. I'm just wondering, like, is this gonna work? Like, do you need to put in some kind of really funny video every day so that when I wake up, I'll just go look at the video and then do my health check or whatever it is, diet, my menu for the day.
So I do have one comment on this. I am in the US. I don't drive a lot, but I still have a car. So I use Metro Mile. So it's an app, but they are really, really smart about gamifying the usage of the app, because it tracks exactly where, it's almost a little bit creepy, exactly where I park, exactly where mileage, how fast. That's how they do behavioral rate, like in terms of my driving behavior. So yeah, Michelle, I think absolutely right. Like if you are trying to force it for a unnatural consumer behavior to force the user to keep coming back, there's no point. I don't need to see a dog video or Dogecoin video on the insurance app. But having said that, there's always a creative way, particularly sort of the quantified self or like very personalized type of insurance product that we've been seeing. So you never know, but Metro Mile have done a really, really good job, and that's for auto insurance, and that's boring.
Yeah.
Okay, I'll check that out. Thanks.
Yeah, I think as Edith mentioned, right, take an open innovation approach, right? Don't try to build an app or commission someone to build an app for you as an insurance company, right? Try to partner with some proven apps out there that will be strong traction with the customer segment you are interested in.
Yeah. Thank you so much, Michelle, for your questions. Nice to meet you. Okay, with that said, it's 6:59. Raymond, thank you so much for taking the time to spend time with us today. And with that said, that's the end of our conversation, capital conversation. For those of you who want to find out more about our accelerator, we started application is till July 12th, and we have an information session tonight in 2 hours. So please join us. Raymond, have a great evening. Can't wait to meet your dog and see you live in person. But meanwhile, have a great evening, and then keep in touch. We'll talk soon.
Yeah, thank you, Edith. Thank you, everyone. Take care.
Yep.
Bye-bye.
Bye, guys.